各位朋友，大家晚上好！在小鹅通视频号、Facebook 和其他平台观看直播的朋友们，大家晚上好！这里是新加坡国立大学中文 EMBA 师说新语大师讲堂的直播间，我是国大商学院的向静。今天是我们师说新语大师讲堂的第5季的第2场。那今天呢，也是我们的主讲教授，我们商学院金融系非常年轻有为的Ben 教授给我们带来的 AI 时代的财富管理。Ben 教授呢是第一次参与我们的师说新语大师讲堂，他说这也是他人生中第一次做视频直播。那很多的 EMBA 同学呢是之前有上过 Ben 教授的金融市场。今天呢，我们现场还有很多新的朋友第一次来参加我们师说新语大师讲堂的直播间。那现在呢，我就邀请我们国大商学院策略与政策系的教授，国大 EMBA 学术主任，也是我们师说新语大师讲堂的总导演付强教授，为我们来介绍一下 Ben 教授。有请付老师。
好的，各位朋友，大家晚上好，非常感谢来到我们的在线讲堂。我也非常荣幸能够在我们这样的一个新的这个 season 里面，能够去邀请 Ben 教授来贡献一节公开课。那么刚才向老师说呢，这个 Ben 教授是年轻有为，我觉得呢，确实这是一个最恰当不过的一个形容词。应该说呢，这个 Ben 确实是当得上青年才俊这样的一个词。他呢是2017年在 Chicago 的 Booth 商学院获得了金融学的博士学位，然后呢，随后就加入了我们新加坡国立大学的商学院，在金融系任教。曾经有一位金融系的一个同事，我非常好的一个朋友，在推荐他给我们上课之前呢，跟我讲了这么一句话，他说，他可能是金融系里最聪明的一个人。那我觉得是非常非常认同的。我记得我还是在2021年的时候，当时我是在上海隔离的时候，当时我呢就接入到了当时我们采取的这个教学方式还是 hybrid 的，就是在线上也可以接入，用 Zoom 也可以接入。我进去听了大概半个小时时间，听 Ben 的他的这个授课。那么听到他讲这个 CAPM 就是资本资产定价模型的时候，我觉得哎呀，这个怎么讲得这么清楚呢？我觉得这个听起来会是一个享受。那我也非常高兴能够邀请他来参与到我们的师说新语的这个大讲堂的这个活动之中。那我相信呢，我们今天每一位听众都能从中获得很多的收获。他呢本人是专注于研究供应链与财务杠杆决策的相互作用、普通股的投票权的定价以及投资顾问的监管。他的这个包括了他的研究和教学领域包括了国际金融的管理、金融应用中的机器学习与人工智能，以及这个金融监管以及网络公司的金融。那我呢就不多说了，我把时间留给 Ben。我想呢，这个他呢也是会非常高兴参与到我们这样的一个活动之中。来，我就把所有的时间交给 Ben， 来有请。
Hi, good evening, everyone. Thank you very much for joining us on a Sunday night. And as Professor Fu gave me an extremely kind introduction, I won't spend any time talking myself. I look forward to the 1 hour or so that we have together. And I hope you learn something, you enjoy a little bit of it. If you have any other questions, please feel free to ask us directly into the chat box so that they'll be fielded over on my side. As you can see, I will be speaking in English, and I apologize. I studied Chinese for 12 years, but I am not fluent enough. So your English is better than my Chinese. So I will do it in English, and we'll have a translator here.
OK， 非常感谢Ben教授的介绍。那我们今天现场呢，也非常的荣幸，请到了我们给我们 EMBA 上课专用的我们的御用的翻译大师啊，我们的 Bernard 老师在现场。所以呢，我们等一下的 Q&A 我们会有 Bernard 来给我们做现场的传译。非常感谢付老师的介绍啊。那关于这个财富管理啊，我想应该是大家非常关注的一个话题。那财富管理是从什么时候开始的呢？它又经历了怎样的一个转变？我们去年从 ChatGPT 开始，让我们感受到啊，在这个 AI 的来临的时代，让我们的生活和工作都正在被颠覆中。那财富管理呢，也是同样如此。那接下来呢，Ben教授将会为大家来分享从18世纪开始的财富管理的1.0阶段，到如今的3.0阶段，财富管理的前世今生，以及在数字化时代，我们将如何管理我们的财富。那1个小时之后呢，我们会回到这个直播间，Ben教授会为大家答疑解惑，我们一起来聊一聊大家关注的财富管理和投资的问题。那在最后一个环节呢，我会为大家来介绍一下关于国大商学院和我们的 EMBA 课程。那我们就准备正式开始，请我们的导播小助手切入公开课画面，我们开始今天的学习。
Hi, welcome to the Chinese Executive MBA Masterclass on Wealth Management in the Digital Age. Today we'll be talking about structures, toolkits, and technology, and putting everything into the historical context. We're also going to talk a little bit about how recent developments in the financial markets as well as in financial technology are going to impact the wealth management industry. My name is Ben Charoenwong. I teach the financial markets and management course in the program, and thank you for joining me. So when we're taking a look at what is wealth management, or broadly financial management, okay, the term wealth management pertains to financial management with the focus on individuals, okay, when managing their wealth. Typically they're trying to pass it on to the next generation. What is wealth management? It's a regulated professional service where they provide financial management and investment advisory services. This typically includes budgeting, cash flow management, investment management, picking the types of things to allocate to, tax planning, setting up different legal vehicles, structures, writing the appropriate legal contracts, bringing in the appropriate service providers, as well as risk management, thinking about how do we actually ensure that the next generation can actually prosper or have the determined amount of wealth, right, to be able to support themselves. Really, the objective of all of wealth management is to have an improved lifestyle or to have a better legacy. So when we're thinking about this, when we talk about wealth, it's a fairly broad concept, okay? So let's take a look at the different types of wealth that we have. We have three types. The first is financial wealth. That's typically front of mind for most people trying to think about wealth management. But we also have social emotional wealth. Of course, it's related to how well you're doing financially, but it's slightly different. We also have, importantly, family cohesion. And when we're thinking about the Asian context, understanding the role of finances and how it can be used to bring together a family or a clan is that particularly important. So when we think about this, we have short-term goals as well as long-term goals and different types of services that are needed in either horizon. We're talking about financial wealth. We have things like accounting, tax advice, drafting up contracts, managing short-term investments as well as cash flow. In the longer term, you have things like real estate, right? We're collecting rents, right? You have long-term investment strategies, thinking about how do you allocate all around the world. And importantly, also setting up a proper governance structure that can withstand the test of time. In terms of social emotional wealth, this has grown more in the recent years. We think about public relations or even political involvement. Longer term impacts may include things like philanthropy, managing your art collection, or harnessing your wealth to fight something like climate change or global poverty, right? To try to create some kind of impact. And of course, understanding the social emotional goals, both in the short term and long term, will be tied together with the financial goals. Lastly, we have things related to family cohesion, where you have a concierge, right, where you may appoint someone in your family to be the point person for the family office, doing things like organizing family reunions, planning getaways. That's become increasingly popular. In the longer term, thinking about descendants, right? Who in your bloodline should get what portion of the business or what portion of the investment. All of these are broadly tied together in wealth management. So let's take a look at how we got here. Wealth management 1.0 really started in about the 18th century. Okay? Thinking about legacy planning became front of mind when you have lords actually thinking about passing on their legacy to the next generation because they have to go to war. In fact, the initial creation of a legal trust had to do with knights, lords, other aristocrats trying to pass on their wealth to their children because at that time women could not own much property, right? So they create these trusts and they'll have someone to actually help to allocate the assets on their behalf. We're taking a look at how things were done then. It was primarily based on personal rapport and trust. It was costly to build the trust. Literally, the term a trust, a legal trust, you have to appoint a trustee. When you are gone, you need to trust them to act on your behalf. As a result, this kind of structure is actually not accessible to everyone. It was quite costly to build a relationship, to have someone you can trust, and to have enough assets to actually create a new legal structure to actually park it under and then move it through the different generations. The processes, mostly, paper-based documentation. So if you think about it, this kind of wealth management came before modern accounting standards. So thinking about double entry bookkeeping, how are you actually managing things? The very first step of organizing your wealth is finding out what you own. And nowadays in Asia, as we have more wealthy people, as we'll see in a couple slides, the first thing to figure out is where are all the things that we own, and then we actually make sure they're still there. So documentation typically is quite manual. The information gathering process is also fairly tedious. Things are paper-based. There's limited record keeping, right? Fairly low information quality. And information aggregation is very scarce. That is, we cannot make a holistic plan based on everything that we own because it's so hard to get information on everything. Unsurprisingly, the very first assets that people typically invest in are assets that you can easily verify. Things like ownership in a company is fairly difficult to verify if you don't have the share certificate or some kind of digital record. The easiest thing to verify would be things like real estate and land, right? You trust that a castle will tend to always be there. A building will stay there unless there's major accidents, right? And land, it's fairly easy to send someone to check what's going on in the land. Is someone living on it? If so, you need to find some way to get rid of it. So the features of Wealth Management 1.0 from the 1700s to the late 1970s included relationships built on trust and reputation. There's fairly limited reliance on formal legal structures. In some sense, much of the legal structures like trust and corporations were not genuinely set up for the focus of investment allocation, wealth management, and may not be adapted to the needs of wealth managers today. We also had limited technological integration. What do we mean by technology? Things like an abacus, right? Record books, a bookshelf, right? Those were the kinds of things back in the day, right? A locker to actually put things in, safe deposit kits, and so on. So the legal structures that typically were used are trusts or a standard corporation. Now, standard corporations are not the best type of vehicle to create and manage family wealth for various reasons. There may be regulations on reporting. You may need to disclose everything that you own. Many times families don't want to do that, right? So clearly there's a need moving from Wealth Management 1.0 to Wealth Management 2.0, as we'll see in a couple of slides. Wealth management includes structuring, planning wealth to assist in growing, preserving, protecting wealth in a tax-efficient manner with someone's wishes. Typically, they're set up by some kind of patriarch, that may be some aristocrat. They'll write down the set of rules, right, that they would like the wealth managers to follow, and they would like that set of rules to actually propagate through time. Or they design a vehicle such that it may only last several generations and expect that to actually dissolve. The initial trusts set up in the United Kingdom actually have a terminal date on them. Typically, there'll be something like 80 to 100 years. Nowadays, we can renew them for another 80 to 100 years. But if you think about it, that's fairly clunky. If we're thinking about setting up an institution to last the test of time, why don't we set it up so it can last, in theory, forever? The origins of all of asset management can be traced back to around this period, where you had wealthy individuals and families entrusting their fortunes to private bankers. Some of the oldest and prestigious private banks in Europe today started out as family offices, where you had wealthy individuals assigning or appointing trusted people to manage their wealth on their behalf. So these include Lombard Odier, which started in 1796, Pictet in 1805, the Rothschilds, right, the Rothschild Group, which is currently run by the 7th generation, which is, think about it, quite impressive. The Rothschilds, of course, are notorious for actually financing wars in Europe. So they actually gathered a lot of assets, and they were actually providing loans to both sides of the war. So no matter who won, they would actually stand to benefit. In some sense, they were hedged. We have Mirabaud, as well as more recently, EFG, European Financial Group, set up in 1995 and is now publicly listed. Many of these banks remain privately held and managed by the family up to this day. So if you think about it, to set up a structure to last 7, 10, 15 generations, you actually want a lot of rules, right, and clarity and transparency in place. Typically, these types of private banks offer a range of services, supposed to be a one-stop shop for the family. They include lending, deposit taking, currency management, trade finance. Many people who are looking to manage their wealth also own companies, so they want to segregate their own personal wealth from the operating company, the operating business, right, which may have its own cash flow needs, as well as portfolio management. Think about where to allocate, where to park your assets to minimize things like political risk, macroeconomic risk, and other kinds of financial risks. So if we fast forward a couple centuries, now we're looking at the 1900s, there is the establishment of the very first mutual fund. So if you think about it, for hundreds of years, the way that you manage your wealth is you go out, you pick what types of assets to buy, and I help you manage it. In some sense, that's pretty inefficient. In 1924, the very first mutual fund was set up, and what it did was it pooled investors' money into the same vehicle. Now, nowadays, when you're thinking about regulation, whenever I mix a lot of people's money, that's where the regulation is the most stringent. You can see why it took centuries before this was actually allowed, and someone tried to push the envelope to pool resources together. Prior to this, all the pooling of resources were done based on private arrangements. So you kind of manage your own set of contracts. If something went wrong, the legal protections were fairly limited, right? Because you were an informed person entering into the partnership or corporation. The establishment of the first mutual fund actually allowed for the pooling financial resources across retail investors. So now the restrictions have decreased. What we'll see is, as we move from wealth management 1.0, 2.0, 3.0, that the access to financial markets tend to have increased over time. And as financial economists, we tend to think that's a good thing. We should let more people invest in the growth of the economy so more people will benefit. Up until 1970s, so another 50 years have gone by, what people have done is pick individual stocks and bonds to invest. So is this a good company? Do I think it's going to go up or it's going to go down? To the point that people did not even realize what's the best way to calculate returns. So one of the first things you'll do in my class is calculate returns, estimate the returns, right? And actually think a little bit about what the returns genuinely mean for an investor. There's no regard for diversification. The very first index fund that tracks the market was established by Jack Bogle in 1973. He's the founder of Vanguard. At that time, they could only raise $11 million. That's fairly small given that Jack Bogle already had multi-year track record managing institutional money. Since then, index investing has grown to tens of trillions of dollars. Okay, so this has been a huge major success. And it turns out index investing naturally flows out of some theories of portfolio management, which we will see in a couple of slides. So we started with what are returns? When I invest in a stock or a bond, is the return just the income, the interest, the coupon payment, or the dividend that I get? Or is there another component? And if there's another component called capital gains, how can I go about realizing that? So we'll have some wisdom from Jack Bogle. In the picture here in the slides, you'll see the first investment trust. That's the very first index fund that they created. This is actually share certificate number 1. When you invest in the fund, you simply buy shares in a special type of corporation that all that corporation does is invest the assets that it's gathered. Okay? That's what a fund vehicle is. The idea came from 1951 from his undergraduate thesis at Princeton University, where he was inspired by writings of another professor. So you'll see the theme here will be, as we teach people finance and financial markets in school, you have entrepreneurs who take these ideas and implement it in the real world. And you'll see modern finance today has been built on this cycle of development. So Paul Samuelson was a professor at MIT, the second Nobel Prize winner in economics. He's the quote, quote, father of modern economics. He's partly responsible for bringing math into economics and finance. Prior to that, economics and finance are mostly writing in prose, just trying to explain ideas and have some graphs. Now we actually can solve dynamic optimization problems, which, if you join us in class, you'll actually get to do in reality. So some quotes from him include, don't look for the needle in the haystack, just buy the haystack. It's estimated hundreds of billions of dollars every year are been spent in management fees to pay people to find good stocks. Instead of that, maybe they could have had more money if they just bought everything, including the bad ones, right? Knowing that maybe the bad ones are not that bad, such that when you get everything, you also get the amazing ones, which are really, really good. Second quote, index funds eliminate the risk of individual stocks, market sectors, and manager selection. Only stock market risk remains. So there is actually this idea that when you buy a lot of stuff, you can actually spread out the risk and actually make some form of risk go away. This was actually related to the development of modern portfolio theory in 1952, which we'll talk about in 2 slides. So now we'll move from the 1970s Wealth Management 1.0 towards Wealth Management 2.0, which is the 1970s to 2020s. So I will argue, in recent developments, there is actually a break from Management 2.0 in terms of the capabilities of what we can do in wealth management. But for now, let's take a look at what does its 50-year span give us. Wealth Management 2.0 begun the integration of technology into wealth management. This included the introduction of electronic trading. Nowadays, we don't write slips of paper and submit it. Some people still give phone calls. Interestingly, in Asia, it seems people still like doing phone calls. But nowadays, if you go to the US, you go to the stock market exchanges, there's not a bunch of people sitting and writing stuff and yelling stuff anymore. It's done completely silent. It's just a server room, right? A lot of lights blinking, and then you suddenly have trillions of dollars being exchanged in terms of value. There's also, together with this, what electronic trading gave us was very good record keeping. Okay, so that's going to be one theme. The development of accounting and financial services kind of go hand in hand. Without good accounting, I can't diagnose what the investment problems are. So you need financial technology kind of pushing the frontier of both of these types of financial services. In terms of legal structures, we have trust corporations, limited partnerships, fund vehicles that are being set up. Where were these deployed? Things like Cayman Islands, British Virgin Islands, which have a very interesting history, right? They were the safe haven of pirates because those islands were used strategically by the United Kingdom, right, or France, as places where their quote-unquote sanctioned pirates can go attack other ships and not be regulated. So fast forward to today, those are still the tax-exempt jurisdictions. So when you set up a fund in the Cayman Islands, you file some form, you mail that via DHL or FedEx physical copies, and that just gets put in some mailbox. And you might see pictures of buildings in the Cayman Islands that's a small building, but that houses tens of thousands of funds in there. What was the result of this innovation? We have improved risk assessment. Now we have better idea of where things are, what the risks are. You have lower costs from the better computation power, as well as more tax efficient returns through the setup of different types of structures. So I'll give you a taste of what you get to do in class typically. I'll give you the main takeaway of portfolio theory. We're not going to walk through all of the derivation, which involves a little bit of calculus and some assumptions on how people feel about financial wealth. We're going to assume some basic things. First, the more wealth you have, the happier you are. Second, the more risks you have, the less happy you are. We have falling out of portfolio theory, which is an optimization problem. This was developed in 1952. By a guy called Harry Markowitz. You'll see a picture of him in the next slide. Okay. What falls out of this is this key equation, which actually tells us how much of your investment portfolio to allocate to a bunch of funds. So here are the 4 insights from this one equation. What the math actually buys us is tighter logical reasoning. So the introduction of mathematics and data analysis into finance, coinciding with the better record keeping and better computational power, has been our ability to make more optimized or better decisions with more information. So here are the 4 insights. First, someone who can tolerate more risk, that is, have a lower value of A in the equation, will invest a larger portion of their portfolio in risky assets. If you really don't like risk, you should take less risk. How much less? Well, this equation tells you. Second, an increase in the risky portfolio's volatility, which is the risk, will lower the allocation in the risky portfolio. So you have 2 things. both give you the same average return. One has more risk. You should buy the one with more risk less. Does that mean you should not buy it at all? Actually, the theory of diversification says you actually do want to spread out your assets. So when we're thinking about risky assets, you actually want to group all of your risky assets into something called a risky portfolio. Okay, so we'll talk a little bit more about that in a couple of slides. The third insight is if there's an increase in the risk premium or the average return of your risky portfolio, you should increase the allocation. If you don't like risk, invest less. If there's more risk, invest less. If there's more reward, invest a little bit more. And lastly, if you find a strategy which has a better Sharpe ratio, which is the ratio of reward to risk, you should invest more in it. So you might have two assets, both give you 12% return. One has 12% volatility, 12% risk. Another has 3% risk. The theory says you should invest more in the one with less risk. So this is the kind of logical reasoning that we get from an optimization problem, where this type of logic is now being used or has been used over the past 40 to 50 years by asset managers worldwide. Professional asset managers looking at pension funds, Social Security, these types of large superannuation funds are sitting down and optimizing their portfolio based on these types of principles. Maybe the math has been slightly expanded or slightly further developed, but the baseline logic is still there. This differs from the way individuals or some smaller family offices have been managing their money, where it's been much more of a focus on which stocks are better, which bonds are better, where better may not be a very well-defined quantitative term. In some sense, what that means is most individual investors, as well as smaller family offices, are investing using technology that predates 1950. Okay, so maybe they're investing in the style of someone who invests before their computers and iPhones existed. So the question is, how can we provide better services to this huge pool of people who may not have the sophistication to actually set up some kind of optimization problem? So that's how we're moving from wealth management 2.0 towards wealth management 3.0, where we have now more companies trying to offer these services to a broader market. But before we do that, let's take a look at some wisdom from Dr. Harry Markowitz. So he developed this quote, quote, modern portfolio theory in 1952 based on his dissertation at the University of Chicago. And here's probably the most important quote. Perhaps the most important job of a financial advisor is to get their clients in the right place on the efficient frontier in their portfolios. That is, don't buy stuff that is dominated by other things. Get to, as best, the reward for risk as possible. But their number two job, a very close second, is to create portfolios that their clients are comfortable with. Advisors can create the best portfolios in the world in terms of reward for risk, but that won't really matter if the clients don't stay in them. So I can find you a very good stock, but you cannot hang on to the stock, and you let it go as it drops, even though it's going to do better in the future. That defeats the purpose of finding the good stock in the first place. Or maybe we need to redefine, right, what good actually means. In that sense, everyone is different. Perhaps they need a slightly different allocation. They should have slightly different portfolios. It's not a one-size-fits-all. The nice thing is, what the math tells us is finding the optimal portfolio or asset allocation can be broken loosely into two different steps. And the nice thing about these two steps is it doesn't matter where they're investing or what they're thinking about. The two steps are always the same. The first step, find the best risky portfolio possible. We call this the tangency portfolio. In reality, this industry is known as the investment manager industry, the fund manager industry. People who run hedge funds, mutual funds, their job is to get the best reward for risk possible. And then after that, they give you a menu of all the possible funds that they think are good. Then we get step two, finding the optimal allocation based on your own preference. How much do you tolerate risk? Do you need money in Singapore dollar or the United States dollar? When do you need that money? Are you saving for your kids' tuition where you might need something in 10, 15 years? All of that gets taken into account in step two. Fund managers don't care how many children you have. your wealth manager definitely should. We call this the financial advisor or the wealth manager industry. Private bankers also fall under this category. They come to you with a menu of things that they think are good, and based on that, they discuss with you what they think is most appropriate given your preferences. Their job is to know you well, but that's not it. They also get paid through other means. We'll talk about this in a little bit, because the other ways that private bankers get paid may actually introduce conflicts of interest. So the development of this idea of portfolio management, again, staying within the realm of wealth management 2.0, really took off in the 1980s and 1990s, where you have banks started to hire PhDs who are trained to do this kind of optimization to actually build some of the software in-house. Goldman Sachs really took charge of this. They built something called the Black-Litterman model, which is still fairly widely used today by pension funds, banks, other kind of wealth managers, and so on. There have been many software companies that have been set up to actually help you do these optimizations. Goldman Sachs set up something called Goldman Sachs Asset Management. That gave birth to a handful of other fairly well-known large funds today, including AQR Capital Management, right, which grew out of this Goldman Sachs Asset Management shop. So now we have trillions of dollars being invested and allocated through the principles of this portfolio theory. And what we have seen is, in general, they've managed to cut costs, cut down redundant investments, and improve their returns and better hit their goals. So we take that technology and we move forward to Wealth Management 3.0. And that's where we are now. And we'll discuss a little bit about what about some of the new technologies that have just been developed in the past couple of years, and what will that mean for the wealth management industry going forward. There have been a lot of people marketing, groundbreaking innovation, but let's think about it from a first principles perspective. What do we have? Here's the backdrop of the present day wealth management. There's been an explosion of wealth. Globally, the demographics are shifting. People are having less children, right? You have the baby boomer generation are starting to pass on wealth to the millennials and Generation Z. The baby boomer generation generated a tremendous amount of wealth because their whole lifespan have seen huge amounts of economic growth around the world. So if you look at the share of the high net worth population that I'm showing you here, a larger fraction of it starts to come from Asia. And the demographics, indeed, Asia 50 years ago and Asia now are tremendously different. And a lot of these businesses, companies, and wealth are now being passed on. Okay. When we think about wealth management, people immediately think to Switzerland and the banks that were set up in the 1800s. We're still working with those legal systems and structures today, but where the wealth is coming from has shifted. We have much more now in North America, much more now in Asia. And that Asian component we expect to continue to grow. What are the opportunities that we're identifying here? Are also opportunities for people to come in and actually disrupt or innovate in the financial system. I can identify 4. Number 1, there's an increase in growth and internationalization due to the growth of individuals. They want to unlock their wealth. You don't want most of your wealth all in one company, because what happens if something happens to that company? Right? You don't want everything to disappear. You want to start allocating all around the world. So that actually generates this gap where maybe there can be people serving, right, wealthy individuals to advise them on what type of international investments to make. Number 2, there's been a transformation of some financial institutions into family offices. Many banks have set up special wealth management arms, and those are actually the component that's been driving their growth. Regulation has forced banks to actually now carve out some of these into separate entities. Right? You're not allowed to group too many things under one house anymore. Legally, they have to be in separate entities for regulatory purposes. And there's been an inflow of talent from standard traditional financial institutions out towards wealth management. These include accountants, compliance people from the back office, as well as fund managers come out now to become the chief investment officers of family offices as well. Number 3, there's been fairly slow growth of large multi-family offices in Asia, primarily due to confidentiality reasons. A lot of people don't want to share what they own, how much they own, and where those things are. Therefore, maybe a slightly different model needs to be adopted for Asia. Something such that you can pool some resources so that you don't have to all hire your own set of accountants, but at the same time, maintain confidentiality and segregate the portfolios from one another. Number 4, there's still more scope for a global network of collaboration, as well as multi-jurisdictional multifamily offices. Many now are very localized. So you have a European multifamily office, you have a Singapore-based multifamily office. But yet there can be a lot to gain from sharing some information, maybe things like what are new regulations around the world, which may be hard for someone sitting in Singapore to pay attention to. So what characterizes Wealth Management 3.0? There's been rapid technological advances. In fact, the technology has moved so fast, regulation hasn't quite caught up yet. There's been an integration of things like artificial intelligence for data analytics and predictive modeling. We still don't know what the rules are around that. If I have a machine that's very good at predicting your behavior, I can, first of all, help you act better, but second of all, I may also exploit you better. Right? So how do we put rules around that? We have other developments, things related to the blockchain and decentralized computing, including automatically executing smart contracts, where you can now have an escrow account and pre-program in certain conditions that tends to increase efficiency, as well as something called tokenization, where you can create assets and now carve them out and trade them digitally to potentially increase the liquidity of those assets. We also have new legal structures. For example, in Singapore, there's the variable capital company, which was designed to actually be a fund house. Other jurisdictions also have special purpose vehicles that are designed to house funds. And of course, we have the old classic trusts, where if you're thinking about passing on wealth, maybe just to 1 or 2 generations, you can peg and create some fixed lifetime of the trust, such that once it hits that time, it unwinds and everything is fully passed on. The result from Wealth Management 3.0, present day developments, has been more legal protection in terms of your data, your privacy, as well as tax exemption, right, taking advantage of these different jurisdictions, as well as more informed, data-driven decision making. We'll talk a little bit about that. I'll give you 3 clear examples of the types of innovations that have been developed and being deployed today. First, mobile apps in wealth management. Probably most of us now have some kind of bank or trading app on our phone. The implementation of encryption, hashing, as well as using things like biometric authentication has actually improved the security of finance, to the point that we quite trust. We don't need money and resources in terms of physical bricks of gold that we just put under our beds anymore. We trust there's some kind of financial infrastructure, some cyber infrastructure, such that when you put your thumb and it gives you a number, those numbers represent genuine value that you can actually exchange for goods and services. There's also been the rise, part of this decentralized finance, here we have decentralized identity management, that can potentially improve compliance and operational efficiency, in the sense that you can digitize your records and metadata for safekeeping, but encrypt it in a way such that no single person can come in and take your information without your permission. This can actually streamline a lot of bank onboarding processes, while actually also improving compliance with things like anti-money laundering and know your customer, know your client regulations. What this has resulted in is an even more wealth of information and at lower costs. Let's think a little bit more about mobile apps in wealth management specifically. And maybe the term wealth management may not quite apply for mobile apps anymore, because when you're thinking about mobile apps, we're thinking about good user experience and frequent usage, right? One of the number 1 metrics for people running apps on your phone is how frequently do you open it. If you're managing wealth for 300 years, what are the chances you need to check on it every day? Probably not that much. Yet, wealth management or wealth management apps, trading platforms, bank apps, right, focus on enhancing the user experience. You have on-the-go portfolio monitoring. You get push notifications when some piece of news comes in. So it's worth thinking about, with more data hitting you faster, when you're looking at a lot more information more frequently, is that necessarily better? Does that improve your decision making? Now, if you are rational, the answer is yes. More information should always be better. You must be better off if you had more information, because you could always choose to ignore it. You have the choice to just not use that information. But if people are behavioral, for example, they might overreact to some piece of news. Right? We have now strong evidence. People tend to, in good times, think the good times will go forever, and in bad times, think the bad times will go forever. And that seems to look like overreaction both on the upside as well as the downside in the financial markets. Now, if you have overreaction, maybe getting fed more information is not a good thing because it gives you more opportunity to make mistakes. If you think about what some of these apps have in terms of their incentives, how they make revenues, right? Many of them make revenues based on your activity. So their incentive is actually to get you to trade as frequently as possible. They don't necessarily get paid on how well you do. So now we start to think a little bit more about incentives, right? What are the agency problems, the conflicts of interest that are inherent in the financial system? So after we go through some of the overview of these innovations, we'll spend time talking about what are the fundamental misalignments that are in financial services and whether and how technology can impact that. So to give you some information, using data in the United States, for about 66,000 households, they have information from a broker over 5 years. The market over that time generated about 18%. So this is pre-dot-com bust. So actually the market was doing very well. Those people who traded the most on average got about 11%. So the conclusion here, the data suggests that the more you trade, the worse off you do. In fact, we have some reports produced by some of these brokerage firms themselves where they find some of the best investment accounts are the accounts that belong to dead people, because dead people don't log in to make mistakes. They can just stick with their investments forever. So in today's day and age, in the mobile digital era, we have more information 24/7, except if your app has a blackout or some downtime. But in general, you would think you can access the information at any time. There's more convenience in managing finances. To move money from Singapore to the United States is about 6 taps of the phone, and you can move a chunk of money there at very low cost. Okay? The increased reliance on mobile phones also has a dark side. Allowing people to pick their own dashboards, that is, what do you see when you actually log in? We have some research suggesting comparing users on a computer versus a phone. People on the phone just make more mistakes. Even the same person, when I use a computer or I trade on my phone, when you trade on your phone, you tend to make, first of all, more mistakes, but second of all, take more risk. So it seems to be something about impulse, right? Where the mobile phones, this immediacy of having information as well as the ability to execute actually may cause people to lose their wealth. There's been a rise of demand for personalized digital services. We all get sent hyper-personalized ads, but yet the portfolios now that you're being offered are typically one size fits all. So we haven't quite reached the era of personalized portfolios tailored to your specific consumption habits, risk aversion, preferences, beliefs, and so on. So I'll discuss a little bit about that as well. So to summarize Wealth Management 3.0, we got the utilization of big data analytics for informed decision making. You have real-time monitoring and updating of investment strategies. That has manifested in enhanced client experience. So when you go in to sign up, create a new account, you don't have to fill 80 pages, right, of information and questionnaires, because you might just be able to link your Facebook profile and they can extract some information from that directly. So we hope that creates personalized and interactive client interfaces that allows you to actually both have better information as well as get better wealth management services. And more recently, we got the integration of AI chatbots for consumer support. So at least now you can genuinely ask it a question, and based on some documentation, it may be able to respond. Of course, this is a big area of development because sometimes when it responds now, it's just complete garbage. So we might need to give it a couple months of refinement. What has this type of technology brought us? To summarize those 6 features, first, it's something related to better information, right? You got data normalization and integration. so that you have a better, more holistic view of your investments as well as your spending behavior. That's one of the key principles and the most important foundations of financial management and wealth planning. Number 2, you gain cost efficiencies in terms of access to more products. You can now invest in Iceland, right? Even though you may not have ever been there, but you can just go onto the platform and own something in Iceland at relatively low cost. What this has done is actually pushed the access from what used to only be available for institutions and ultra high net worth down towards the mass affluent. And now we're getting a push down towards retail. But as you're moving down and you're involving more and more people in the financial services sector, what that has done is actually reduced the reliance on relationships, so that someone who may not have a relationship with a private banker can set up now an account online. The reliance of the relationship allows them to enter the market, but on the flip side, there's also less incentive potentially for the platform to really treat you well. So the question becomes, can you trust these chunks of code? So let's talk a little bit about the fundamental misalignment, or the principal agent problem. Many of you have private banking relationships. Somewhere in that private banking contract is a clause that states conflicts of interest. If you spend some time looking at that clause, for example, for some Swiss banks that shall go unnamed, the clause may read something like this. The bank may have conflicting interest in any and all of your activities. And what that means is, if I want to buy a stock and they sell it to me, they may be actively betting against me. And many of us, when we sign these contracts, it implies you acknowledge that you're aware of these incentives. And you're aware that despite these incentives, you still want that private bank relationship because it brings other types of benefits as well. There's an inherent conflict of interest between clients, that is the principal who owns the assets, and advisors, the agent who helps to direct what you do with those resources. There's asymmetric information in that they likely know more about financial markets than you do. That's why you hire them. But they also have slightly different incentives. Private bankers in general make money on the amount of wealth that you put with them, as well as commissions based on specific sets of products that they can push and sell to you. Now, if you know to ask them how much commissions they make, legally, they have to tell you. But if you don't ask them, sometimes no, they don't even disclose. And you may be surprised. Some of these commissions may be quite large. So imagine a world, right, to better understand what this feels like, imagine a world where you go in to see a doctor, and the doctor doesn't necessarily have to help cure your problem, right? That suppose they can take commission from a pharmaceutical company and they just keep you a little bit sick so that you can keep paying because that's how they maximize their income. And suppose legally that's okay. That's the financial advice industry. In most countries, specifically in Asia, I'll show you in one slide, there's no such thing as fiduciary duty. What that means is those people who are giving you advice who may know more than you in the financial markets are not legally obliged to act in the best interest of their clients always. The standard that has been deployed in some of these countries falls just shy of fiduciary duty. Fiduciary duty means you effectively have to behave as if they're you. Like, what would you do? So let's take a look at the ethics and standards in Asia. Okay. Asia has been a growing market for wealth management, yet on this list of 10 countries and regions, only 3 have a fiduciary duty requirement. The others have other types of standards. They may still include the standard of best interest for clients, but not having the fiduciary duty may imply it may be a little harder to try to legally hold your financial advisor to that specific standard. Many of these markets, we could see here, if we're looking at China, takes up 3 of the 10 different spots up there. The regulations across the different regions in China differ a little bit based on the historical context of the judicial system. But you can see the pattern has been those who have adopted terms and legal history from things related to the United States will tend to adopt a similar language and requirements for the fiduciary duty that is required in the United States. Others whose historical legal context come more from the United Kingdom will have a slightly different set of standards, right? And the requirements may be a little bit different. This is to say, as we expect this wealth management industry to grow even bigger, it is worth thinking about what are the legal frameworks that you're operating in and what should be the standard of care and advice that your financial advisor is actually providing to you. To give you some information on how prevalent misconduct in financial advice industry is, I'm giving you this table from some of my advisors. The answer is about 1 in 5 investment advisors that you meet have some kind of misconduct record. And the most common misconduct record is that the advice that they provided their client is not suitable. That is, given your risk preference, you might not like risk. I might push stuff that's more risky, maybe because I also earn commissions. The number is 1 in 5. When I went to teach a version of this class in a private bank in Asia, and I said 1 in 5, people there laughed because internally they knew the number in Asia is higher than that. However, there's been no study in Asia because getting this information is fairly challenging. And many times the regulators themselves don't really want to tell you what things look like because they may be afraid that the financial services industry get offended and maybe reduce the amount of services they're providing. So you see headlines like this once in a while. JP Morgan in 2015 had to pay $300 million in fines for steering clients into their own funds. Specifically, they may have a fund with different share classes. You might qualify for a share class that costs less, but they push you into a share class that costs more. So it's worth thinking about how investment advisors are paid. One of the first things to ask when you have a relationship is, how are you getting compensated? There's a salary, or there's commissions, or fee only. That is, you only pay whenever you actually ask them for advice. You don't pay their salary, right? You have some fixed rates per hour. In Singapore, financial advice is regulated by something called the Financial Advisors Act. There's no fiduciary duty in Singapore. However, there are other standards of requirement of financial advisors, and they do have to be certified. Okay? Again, wealth management is a regulated activity, much like being a doctor. You have to take some tests to show that you qualified to be a wealth manager. So every wealth manager that you deal with should have some form of registration number that you can actually look up. So suppose we ask, okay, people are flawed, they have bad incentives. Can robots do better, right? What about things like robo-advisors? As I mentioned before, many pension funds and professional endowments, professional money managers, do allocate according to the math prescribed by modern portfolio theory or some form of it. So maybe we just write it into computer code and just have it be deployed. So given your preferences, I can come up with some number, some ranking, and maybe I just pick one of the portfolios that a computer generates for you. Presumably, because this is fully automated, it lowers costs quite a lot, increase accessibility. Maybe instead of needing $10 million to get the service, I can offer it to you even if someone has only $500. Because the code doesn't get tired and now computation is so cheap, it's lower fees. You have a systematic investment approach so they can always show you what was picked and why. It expands the frontier of what's possible in terms of services for retail investors, right? So now we're pushing the services all the way down to try to include as many people as possible. But the flip side may be there's less personalized advice because a human may be able to pick up on other sorts of information that a survey alone may not be able to. And there may be potentials for algorithmic biases, particularly with the use of things like machine learning and AI, which is a black box, and you don't know what goes into it. So when we think about what does the innovation in financial technology give us in terms of the classic fundamental misalignment that may still exist, well, if the technology helps to reduce, then people make more informed decisions, better alignment of incentives. If you can audit my code and I can show you there's no bias in my code, you should be more confident that everything that the algorithm is doing is just based on that objective that we agree on, right? Versus My objective as a private bank may be slightly different, and you may not even know exactly what my objective is. Or if the technology exacerbates these problems, you can actually decrease trust in the financial system. Clients may be even less aware of what's going on because the algorithm may be a black box, they don't understand it, and may result in more harm. If the algorithm detects, oh, you always make a mistake in trading at 2 a.m. on a Friday night, and it says, I'm going to send you more information at 2 a.m., that may cause more harm. They're pushing you to make more mistakes, maybe because they can generate more trading commissions. Does this happen? It seems the answer is yes. Again, here, so far, the technology does not remove the fundamental principal-agent issues. Robo-advisory does not remove the fundamental misalignment because people are still controlling those robots. In fact, it may exacerbate them. So here's an example. On the left side, the United States Securities and Exchange Commission charges one of the largest robo-advisors in the world, called Betterment, for misstating concerns about tax loss harvesting. They were fined $9 million. This is not big in terms of fines as far as fines go. Their computer code had a bug in it where they told you they would do something, but the code did something else. But they never told their clients that the code was wrong. They just tried to quietly sweep it under the rug. And so once it was discovered, numbers don't add up. Some clients found, hey, how come you told me I would save 10%, but I actually saved only 4%? You start asking questions, you begin the investigation, and it was shown that they seem to want to hide the information rather than notify their clients. So it's not that coders cannot make mistakes. It's that when you try to hide them, then you start to enter the realm, right, of misconduct. Charles Schwab, one of the big discount brokers in the United States, also got into a little bit of trouble. They were fined $187 million. So it seems their misconduct is much worse than just a bug in the code. And here's the interesting point. Charles Schwab allocated some of their clients' money into cash, but they never disclosed to their clients that they make a cut on the cash that you hold. And in fact, their algorithm was biased to put too much of your money into cash. As a wealth manager, one of the things you're always thinking about is, do you have cash drag? If you have too much cash, cash tends to earn low returns compared to other assets. So if you have too much cash, that can cost the client a lot of wealth if we're talking about investing in 10, 20, 30 years' time. So here, Charles Schwab actually had excess cash drag in their clients' accounts and did not disclose that they earn a cut of the cash. And the cash is actually where they make more of the money. So when you set up these algorithms, it was designed to actually maximize their own benefit rather than do the best thing for the client. So for that, they were fined a much larger amount. But in light of all of these issues, right, technology doesn't solve the fundamental problem, yet technology does expand the market, right? Undoubtedly, the rise of robo-advisors, that is taking modern portfolio theory and putting it into a computer program, offering that to clients, has been a net benefit for people who are investing. Many people don't know how to invest. Robo-advisors are a great place to get started. However, it's still worth paying attention to what exactly the people are doing, what are their incentives, and not every robo-advisor is the same. So if people are misaligned, how do we solve the fundamental misalignment? So here comes the rise of so-called family offices. Maybe if you cannot trust someone else to manage it for you, you should do it yourself. Singapore passed the Variable Capital Company Act, which took effect in early 2020, just in time for COVID, where this entity protects consumer interests. It gives tax advantage. You have confidentiality, but there's some obligation. So when you set up a fund structure in Singapore to foster local investment management industry and other service providers. So you have to spend some money here. The idea of this type of entity is actually for you to park money, and the government will ask minimal questions on what you're doing with the money. They're subject to some compliance requirements, which everyone is subject to. But beyond that, you don't have to disclose as much as if you're investing in a standard corporation. There's been now more integration of technology to improve compliance and reporting, as well as to improve portfolio management and investment advice. Again, the idea here being hey, there's a fundamental misalignment in the sector. Let's bring everything in-house and do it ourselves so at least we know what's going on. So this has been the trend, definitely in Asia, but also more globally as well. The services provided by family offices are effectively innumerable. I list here a bunch of things in small bullet points. That list is probably incomplete. The main takeaway is this. The family office is designed to be the one-stop shop where everything is taken care of in terms of planning, cash flow management, setting up legal structures, solving disputes within the family, going on family vacations. You have things like working with divorces, unfortunately, divorce rates rising around the world. Tax planning, pay your bills, pay your gardener. All of this stuff can be housed under the family offices. If you think about it, if you just go through these different services and you say, yeah, those are useful, then it may be worth thinking about, should we then set up a structure to actually handle this? What does the family office need in terms of their technology stack? Unfortunately, also a fairly big stack. Okay? Not everyone can set up a family office. In Singapore, you really want about $5 to $10 million worth of wealth before it becomes, quote, quote, worth it to set something up on your own. You have asset management platforms, governance and communication platforms, especially if you think your family will become large and you think you have children, their children will come in and so on. There are deal flows. How do you make sure you actually have access to some of these financial instruments? Planning, forecasting, how much cash will you need? Is there an issue with your operating business? You have portfolio management, consolidated reporting. Because many people know there are conflicts of interest in private banks, many clients are also clients of other banks. And importantly, those banks don't talk to each other. Legally, they're not supposed to. So the burden is on you to then put everything together. We have risk management tools, data aggregation and integration, portfolio analytics, due diligence, right? When you want to enter into a new venture, make sure that everything is above water. There's been audits, all right? You can see it. ESG and impact, a growing sector, especially in impact investing related to climate. The treasury, managing cash, back office accounting, as well as fund administration. So these are all things that a family office will require if they want to set something up. Definitely, the ecosystem in Asia has become much more streamlined. So now for some of these services, you might actually be able to get them at a fairly low cost with a fairly high quality of service. So we're thinking about the fundamental misalignment, as well as the broad historical context of how we got here and what the technology is doing. Let's think a little bit about what lies ahead. Some of these technologies, when they come, they hit us right in the face. It's hard for us to react. It's really hard to predict what's going to take off and what will wealth management look like in the future. People have tried to speculate, so let's try to do a little bit of that here based on some of the first principles we've seen in terms of incentive alignment. What do we have? First, you have more computing. Quantum computing, local AI models. What local AI models mean is you can run an artificial intelligence or large language model right on your own device. It's segregated. Your information never gets sent to anyone else. So maybe we expect better data privacy, plus more customized advice. There's no reason why the model cannot be trained on just your own personal behavior and your own family documents. We also have broadened data gathering. There's been slightly less of a focus on this for wealth management, but things like IoT, the Internet of Things, how frequently are you visiting one house versus another house? That can actually help in your forecasting and budgeting on how much to spend in maintenance. So some of these technologies may affect the fundamental issues. Things like smart contracting and tokenization may actually change the incentive alignment in wealth management, but other things like gathering more information, maybe not really changing the fundamental things. Okay? But we expect more innovations going forward, more data, and the usage of that data in providing services. So let me give you one example. We might think about cryptocurrencies as the innovation. At one point, we marketed cryptocurrencies as potentially the finance of the future. Now I think there's a little bit more concern about that. We now know, in theory, there's no such thing as a risk-free rate in cryptocurrency. Plus, not all stablecoins are provably stable. It's also very hard to understand the risk-return trade-off given much of this risk are regulatory. The passage of one law can kill the entire sector in one go. Estimating the risk is difficult. Estimating the returns themselves are fairly difficult because these assets haven't been around that long. More recently, cryptocurrencies are pending ETF approval, exchange-traded fund approval in the United States. Some people think that's going to be when cryptocurrency goes mainstream, but there already are ETFs around the world. There are already fairly easy ways to get exposure to this. So it's not that obvious to me that this is going to be a game changer. It's also worth thinking about tokenization. The promise of tokenization was that you can then own a diverse set of assets all directly. But when you put it in an ETF, a fund structure, you're using a legal structure similar, slightly different but similar, to something that was built in 1924. So why is it that we want to take the new technology and put it in the same box that we've been doing all along? In some sense, killing the innovation. So we'll see what will happen in this space. The underlying technology, the blockchain, the tokenization, is completely distinct and divorced from this adoption through the ETFs. Right? So those are two completely different things. Should family offices be exposed to them? I think it's not that clear. Definitely, if they want to get exposure to it, they need to have very specialized, tailored advice, which I don't have. Second, the use of data in something called custom indexing. So this is custom portfolios. Again, this type of custom portfolios have been available to institutions and pension funds, but have yet to be deployed all the way down to individual clients or family offices. You can create portfolios accounting for your preferences, your beliefs, what sectors you think will do well, as well as all of your existing holdings. So that's the data integration and consolidation part. A natural outcome of custom indexing is actually not a fund. The whole idea is one fund may not be the appropriate vehicle. With the reduction of trading costs, we can actually deploy some of these portfolios in what is called an SMA, or a segregated managed account. This is your own trading account. Your funds never touch other people's funds. What that means is the regulatory burden is lower. Plus, you can do much more customization because it's your own account. In Asia, this seems to be of particular interest and relevance given that the control of that account always is in your name, right, in the client's name, as well as there's full transparency at any point of time. Here's an example of how custom indexing may be deployed. There have not been that many services that offer this at scale yet, but this is some speculation that in the near future, there may be some of these coming to the market. So what we have here may be the data gathering component. So your perceptions of risk. How much money do you need to send your kids to school? Your psychographics, that is your goals, whether you have mortgages. Your demographics, the type of person you are. Your risk tolerance, as well as other types of data, like your trading history. How frequent do you log into Facebook? People who log into Facebook a lot, or Instagram, or social media, tend to care more about their image. So maybe they actually want other types of investments. They may want to hold riskier investments so that they can tell their friends they did very well in the market. One key thing is if you talk about investments with your friends, typically it's always about how smart we are. Rarely it's about the mistakes that we made and the losses that we made. But this wealth of data can be then shoved into an algorithm to actually create a unique view for each individual investor where they can look at the market and based on their view, they may like some stocks more than others, and those may then be used to form their tailored portfolio. Other people with different views may have a slightly different portfolio. Okay? So this is an example of using all of that computational power as well as the data gathering and assembling it all in one place to actually deploy wealth management in a way that's more customized. And the idea here being it accounts for the types of mistakes you may make, and it should be designed to help counteract that, right? To maximize the chances you hit your objective, maybe to pass on a legacy, right? Or to save some amount of dollars so you can donate it. So you might end up getting something that includes strategic, tactical, as well as your own personalized bets on the side, right? You have the core portfolio, and you have some satellite portfolios which incorporate some of your beliefs. So to take a brief wrap up of everything we've talked about, the future seems fairly exciting. What we did today, we went through the historical context. We talked about wealth management when it was first started in the 18th century, all the way through today. We talked about the different services that wealth management includes. We also give you a little bit of a snippet on what you may get in the classes here in the Executive MBA program. Talked a little bit about how technology impacts some of the fundamental issues in the wealth management industry. We gave you 3 examples of the impact of some of these technologies already in the market today. We talked about the types of technologies and services you may need to set up your own vehicle or your own setup, as well as some speculation on how some of the analytics may impact investment and financial management going in the future. So if you'd like to learn more, spend more time going into the details and really understand the first fundamentals, we recommend you apply to the program. Thank you very much.
欢迎大家回到新加坡国立大学中文 EMBA 师说新语大师讲堂的直播间。现在呢是我们互动答疑的时间，那大家可以在留言区写下自己的问题，我们也会选择部分来解答。那今天呢，我们也特别邀请到了我们国大EMBA 上课的时候的金牌翻译大师Bernard 老师为我们进行现场的翻译。Okay, so now is the Q&A session. So Ben, would you like to start answering the first question?
Yeah, so before we start,
Okay,
yeah.
OK， 不好意思，我先来念一下这个问题哈。今天我们现在有看到，至少有6个问题。那我们先从第一个问题开始那我这边来给大家来念一下第一个问题这个问题呢是关于在使用 AI 进行财富管理和投资决策的时候，我们如何确保算法的透明度和公平度，避免潜在的偏见和误导？如何避免 AI 投资所导致的投资组合同质化 ？OK, please go ahead. Thank you.
Great. Thank you. And thank you everyone for joining us. Yeah, so the first question is very interesting and it's actually very deep and pretty difficult, right? It pertains to how do we know that the AI algorithm is fair? It turns out actually where the existing regulations are is unclear on that. Okay, so the United States has just passed a rule regarding how investment advisors use predictive analytics, broadly defined. But I think where the regulators are still having trouble is the research on the bias inside AI is still ongoing. So in some sense, we don't yet know even what the problems are. Okay, so this means if we deploy it at scale, there's likely a lot of unintended consequences, right? When it comes times to what exactly is the algorithm using to decide, is that fair? Is that something we wanted to do or not? In many countries that have fairness rules, there are big teams that go through to make sure the algorithms are transparent and are unbiased. I think in this case, almost by construction, is extremely difficult to do. So there's some stuff they can do along the edges, but I think regulating this in the future, it's going to be a really big challenge.
那非常感谢大家这个提的第一个问题，这个非常有趣的一个问题，而且呢是非常深而且非常难的一个问题。那谈到这个 AI 的算法怎么样我们能知道它是一个公平的一个算法呢？其实有的时候呢，现有的这些规管呢，它是不清楚的。比如说呢，我们看到美国呢最近通过了一个准则，就是关于投资的顾问是怎么样去提出建议，来使用预测性的分析学来定义这个就是监管这个所进行的这个建议。但是监管者呢，其实是发现呢，这个研究表明有一些AI 的算法，或者说它所这个进行的这个推荐，它本身就是有偏见的。所以从这个角度来说，我们并不知道问题是在哪里。那这就意味着说，如果我们把这些 AI 的算法大规模的来进行这个部署的话，那很有可能我们不知道这个算法是否能够决定它是不是公平的，然后它的结果是不是我们想要的。 而在其他很多国家呢，它也是要有遵循这样的一个公平的一个准则或者公平的一个原则的。那么有一些大的一些个团队现在呢，想要去利用算法，确保算法它是透明的，而且是没有偏见的。但是在这种情况下呢，仅仅的是建立这种算法呢，其实就已经是非常难能够做到的。也许呢，可能是在一些个边缘的网络上是可以做到的，但是我觉得在未来，如果把这个事情进行监管的话，其实是非常大的一个挑战。
Yeah, so the second part of the question actually has to do with the AI may recommend portfolios that are very similar across people, homogenization caused by the AI. Actually, I suspect the issue that the AI may pick up and make and highlight in the future is actually the opposite. That is, we might have hyper personalization. And to me, this is quite important because, for example, suppose you like NVIDIA stocks, right? Everyone wants to trade semiconductors now. The AI picks up that you like that. Should the AI give you more of it or less of it, actually? Because if you talk to a financial advisor, they typically advise you to diversify and manage your risk, right? In this case, if the AI starts to pick kind of weird preferences or personality quirks, it might end up overloading on some of those things and actually may cause people to invest in a less efficient way. So when we take classes in the executive MBA, a key portion is thinking about risk management and diversification, right? And for that, we need to be transparent. So I think for some investment processes, the AI is actually not well geared to deploy that part of the investment process.
那么我们来谈这个问题的第二部分，就是说，如果 AI 它来推荐一个投资组合的话，那它可能是在很多人之中很有可能会出现类似的这种同质化的情况出现。那么我也怀疑的话，这个 AI 它所选择的这个投资组合的话，可能在未来是反向的，是相反的这样的一种情况。也就是说，它会出现一个高度的个性化。那么对我来说，这个是非常重要的，因为我们举个例子，你喜欢买 NVIDIA 的这个股票是吧？每个人现在都想要买一些半导体相关产业的这个股票。那么 AI 呢，它就发现，哎，你有这样的一个爱好，然后呢，可能就会做出一个决定，给你更多，或者是给你更少这样的一个投资建议。因为当你在跟一个人的这个财务顾问交谈的时候，很明显的，他可能会建议你要多元化，是吧？管理好你的风险。那么在这种情况下，如果 AI 它要发现了你有这样的一个比较奇特的一个偏好，然后呢，它就可能会最终给你这个加注，让你买的更多这样的一个股票。那么这个时候的话，它其实是让人们在投资的时候的有效性降低了很多。那当我们在上这个 EMBA 的课程的时候的话，我们其实有很重要的一部分就是教给大家怎么样去进行风险管理和多元化。那么这就要求说我们要保持透明，在我们所有的投资的过程之中。而人工智能的 AI 的话，它其实是在部署这个部分的投资过程之中相对来说比较弱的。
Okay, so have you finished answering the first question?
Yep.
OK，好，那我们第一个问题已经回答完毕。那我们现在看第二个问题啊，就是第二个问题是关于这个加密货币资产的。这个问题是说加密货币市场的全球性和去中心化的一个特点。那金融监管的架构如何应对？如何更好的去保护投资者和这个市场的稳定性呢？OK。
Great. So, yeah, given the nature of decentralized markets like cryptocurrency, how can we think about financial regulation, trading off investor protection as well as market stability? So I think this is a very important question. I like this question very much because it's actually my area of current research. And so I think to think about and regulate decentralized finance market like crypto, you want to actually think about how much of the regulation can you automate, right? By nature, being decentralized, it's spread over many countries. So it's very hard for one country to exert a lot of control. That's the whole definition of decentralization, right? A core feature that we actually want. Yet we want other features like I don't want to send money to terrorists or other types of quote, quote, bad actors. there's a list of these bad actors that most countries, not all, most countries agree on. Okay, so most countries will have a designated list of who are the people you're not allowed to trade with. In that sense, you can ask the question, how can we then implement that into the computer code so that the agencies and each government doesn't have to keep checking everything many times, right? So you prefer to have one system that actually can handle this. So this is the realm of what is called embedded supervision or automated financial regulation. So I think this is going to be an area of more development in the future. Anyone who's interested in this space, I would love if they reach out to me. If they just search my name, there's only one of me in the world, I think. So then they can email me the question and we can discuss offline, since I think we can discuss that for many hours.
非常感谢这个问题啊，这个是非常有趣的一个问题，而且呢，这个我本身就是做这个研究的，所以我本身对这个来说也是非常感兴趣。那么我想呢，去监管这种去中心化的金融市场啊，比如说谈到这个加密货币，你可能要想一想这个监管到底是有多少，是吧？你能不能够把它这个去中心化的同时，然后又去把它自动化完成？所以，现在呢，我们看到这种去中心化，它本身的定义呢，就是跨很多个国家的，所以很难让一个国家去施加很多的控制。那么，这也就是去中心化的整个的一个定义的所在。那么，一个核心的特点就是说，我们想要的还是我不想要这些钱，比如说进入到恐怖主义啊分子啊，或者是其他的一些坏人的手里面。那好处的这个幸运的就是说，现在呢，在大部分的国家呢都知道有这样的坏人是谁，他有一个列表，是吧？如果我们能够得到这样的一个列表，大家都同意的这样的一个坏人的列表，然后我们就可以做一个程序，把它写入到代码，不允许这个加密货币呢与这些人进行交易或者转钱给这样的人，通过这种计算机的代码让政府的机构每一个政府机构呢都不需要去重复的做工作，做很多工作去检查，而是一个程序就可以完成这样的东西。那么这就是我们叫做内建的监管，或者是叫做自动的金融监管。那我想这个可能是一个在未来需要有更多发展的一个领域。如果任何人对这个课题呢有感兴趣的话，可以呢随时来找我你去谷歌上搜一下我的名字，因为全世界可能我这个名字比较独特，只有我一个人，你可以发一个邮件给我，那我们可以聊个几个小时都可以。
好的，我们稍后也可以把Ben教授的邮件我们发到那个留言区，可以如果大家对这个话题感兴趣的话，可以进一步的跟Ben教授一起来交流。好，那我们现在进行第三个问题，是关于刚才Ben教授提到的这个委托方和代理方的这个冲突的问题哈。那这个问题是说，如何看待私行和资管公司之间站在买方和卖方的角度的冲突？您建议对于高净值用户选择私行还是资管公司，如何平衡双方的关系？Okay, so we come to the third question.
Great, thank you. Yeah, this third question is tough because, as I mentioned in the talk, many countries in Asia do not have a fiduciary duty. So that means investment advisors do not need to act in your best interest. As a consequence, what we find in industry reports are that wealthy, high net worth individuals then work with multiple private banks and multiple asset management companies. So imagine your doctor is not acting on your behalf necessarily. They may be paid by the pharmaceutical companies. So as a consequence, you need to seek multiple opinions, right? You have to meet with many other people. And then the burden falls on the asset owner. This is why the asset owner themselves, I think, increasingly have to be educated and know about financial management, because at the end of the day, they're the ones that have to look out for their own portfolios. I think waiting on regulation in this space is not going to work. And so in the short term to medium term, I think there needs to be a lot of upskilling, a lot of checking the data with other sources, right? Cross-verifying whether a recommendation is appropriate. Unfortunately, I don't think there's anything so far that's been done to solve what I call this fundamental misalignment of incentives. And again, some technology can help, but at the same time, some of the technology can make this problem worse as well.
非常感谢这个问题啊。那这第三个问题呢，我觉得是非常难的一个问题。因为我在刚才讲的时候，我提到很多亚洲的国家呢，并没有所谓的信义义务。那这就意味着说，投资的顾问的话，他是不需要这个按照你客户的最好的一个利益来行事的。那我们在行业曝光中呢，也发现呢，有一些这个高净值人士，他们是和多个私人银行或者是和多个资管公司一起来合作的。那么你可以想象，就是你的医生是吧？他没有按照你的最好的利益来给你开药，来给你治疗，是因为他们的工资是来自于，或者说他们有从这个医药公司这边拿到一些个收入。那么因此呢，你就需要听多方的意见。那么这个时候你要去和很多其他人去交流，去了解。那整个的这个负担其实就已经到了这个资产的所有者的一个身上。那这也是为什么说资产所有者本身现在越来越多的需要去接受教育，去更多的了解金融管理或者是财务管理，因为最终呢，他们才是要照顾好自己的投资组合的这些人。谈到去等待监管，在这个空间里面提出来监管，那可能要等很久啊，都不会出来。所以短期到中期来说，我觉得还是需要更多的一个技能的一个提升。那么这就是要求资产的这个所有者去查询很多的数据来源，去听这个耳听八方然后去验证整个的这样的一个基础然后这个有点不幸啊，但是我觉得这个也是我们可以做一些事情去解决的，就是大家的利益有基本上的一个不协调、不一致的情况。那么技术本身的话，它也可以在某个时候帮助我们解决这个问题，但有的时候可能会让这个问题呢恶化，所以不能完全依赖技术。
Okay, so we come to the fourth question. 好，那我们现在看下面一个问题啊，这个问题也是蛮有意思的，就是说您如何看待现在数字银行对于 omni-channel banking， 就是全渠道银行技术发展，它的优点和缺点是什么？
Yeah, so I think with the use of technology, so a lot of my research is inside fintech, but with the use of technology in financial services, the broad benefit has been to lower the costs to actually engage in these transactions. For example, through your Grab app, you can easily now get travel insurance, right? You might even get savings product through a ride-hailing app. You can, most banks now have apps that you can do on your phone, right? Moving money around has become extremely convenient and much cheaper. Overall, it's become safer, so you don't have to carry a lot of cash, right? So that's definitely the broad benefit. I think some of the disadvantage has been, together with the ease of moving funds around, there's been an explosion of these like online brokerages, right? So letting people trade, having a trade on your phone rather than your computer, rather than calling someone to talk about it. And I think that's pretty much revolutionized the way people engage in these transactions. And there's increasing body of evidence that in academic research that suggests people tend to make more impulsive decisions when they're on a mobile device, right? So in terms of trying to take financial services and then project everything into your phone, into all the other activities, tracing you through the internet and the metaverse overall, and then we have more footprints around the world. They have more information about us, and I think some of the companies may harvest that for their own benefit, which may not be in the best alignment of interests with their clients. But I think on balance, if you look at the pros of enabling more access and speed and convenience versus some of what can go wrong in terms of having too much convenience makes us make more mistakes. I still think overall the financial technology development has been positive.
那谈到就是这个用全渠道的这个银行业，我觉得使用科技的话，其实是非常有益的，因为我本身的这个研究是围绕着金融科技的。那么在金融服务之中使用科技，最广泛的一些个好处就是降低成本，让我们在进行这些交易之中降低成本。那么同时呢，比如说，你在使用下坡本地的这个 Grab 的这个手机 App，你就可以呢随时的购买这个旅行保险啊，就是这个出行保险。那同时呢，你甚至说在这个招车的服务的 App 上面，也可以有购买一些存款类的这个产品。所以大部分的银行呢都有一些 App，现在呢你就可以在手机上进行操作。那这个非常非常的方便，非常非常的快捷，而且成本非常低，非常便宜。而且呢，它也越来越安全啊，它没有人现在身上带很多的这个现金了。就是因为有这种便捷性，这些都是好处。但是不好之处呢，就是说，你现在这个移动你的资金更加的方便了，然后呢，就会有很多的这些在线的中介方，是吧？他来帮助你进行交易，在手机上，而不是在你的电脑上去进行交易。那人们现在可能有很多的关于金融服务的这些信息啊等等的话，它都是通过手机直接就推送给你了，你就可以直接在上面进行任何的交易和操作，而且操作交易的数量会越来越多。那现在呢，在学术研究中呢，也有一些个证据表明，人们在手机上进行这个操作的时候，更有可能会去犯一些这个鲁莽的错误，或者是这个靠直觉去做出一些个决定。那么这个时候，你把这些所有关于金融服务的这些信息放在手机上去追踪它所有的这些活动通过互联网也好，通过这个我们所谓讲的这个元宇宙也好，你就可以获得人们在全世界的整个的它一个金融的一个足迹，获取这些个信息。那么我想有一些公司呢，正是在利用这些信息去收获，让他们自己受益。那当然，这对于他们客户的利益来说，它不一定是对齐的。所以我觉得在这上面应该取得一种平衡，在给我们带来便捷、这个快速和可及的这种服务的时候，也要确保说我们能不能够少犯错。这个我觉得是整体金融科技的发展还需要去注重的。但是总体来说，整个金融科技还是比较积极的。
好，谢谢 Bernard 的翻译啊。好，我们接下来看一下第五个问题，这个是可能很多的我们的EMBA 校友或者很多现在高净值人群非常关注的一个问题啊，就是说在全球经济一体化的大背景下，企业家和高净值人群如何有效利用全球化带来的投资机会，同时规避跨境投资中政治、汇率和法律的风险。在全球资产配置中，他们应该如何平衡投资组合的地理分布和行业多样性，以优化风险和收益比？Okay, let's come to the question 5.
Great. The question 5 is something we will spend a lot of time talking about in class, actually, in financial management. Because the first thing to realize is we have to ask the question, is a particular risk rewarded or not, right? Because when you take risks, you think you're going to get some reward for it. So then the question becomes, these political, exchange rate, or legal risk, do you get paid to bear that risk, right? And so if you do get paid, you can decide how much of that risk do you want. If you do not want that risk, and it's hard to diversify because so many people are exposed to that risk, then you must pay someone to take the risk away from you. There are a lot of financial instruments that allow you to do this. Examples include, entering into financial derivatives like currency swaps. You can do options trading on the currencies to hedge some of these risks in one direction. The political risk side, you have hedges using the entire stock market. So you can craft some of these tailored solutions, which you would discuss with your investment advisor, right? Asking them what solutions are possible. But the general, rule of thumb has been to spread the assets wide. Okay, let me give one example. When the tension between the United States and China become a little intensified in terms of the trade war, right? Many Chinese companies move production into Vietnam. So if you had some Vietnamese investment exposure, you would have benefited from that. Okay. Other companies move their production from China to Mexico. So this past year, for example, in 2023, the Mexican market did very well, right? And a lot of this was what people now call friendshoring, right? Or nearshoring, that is moving some of the productions from China over to Mexico, even if it's a little more expensive, even if the quality is not as good as Chinese production, because it's at least closer and it helps you manage some of these risks. From the investment side, you then actually want to be spread out a little bit. You don't want to spread too thin to the point that additional spreading doesn't do anything. But if you have a broad geographical exposure, then some of these risks will balance off, right? So even coming to the US-China tension on, say, AI and computer chips, right? Many companies in China who want to buy these chips cannot buy it from American affiliated companies, but they can buy it from Japan, right? And so you see a semiconductor industry in Japan has also done extremely well. So these are exactly the types of diversification that will help offset some of these risk factors.
OK， 我们来看一下这个第5个这个问题啊，因为这个谈到这个风险啊，其实这个是我们在 EMBA 的这个金融管理的课程之中啊，首先就会重点谈的一个课题，就是我们要认识到，或者说我们要问的这个问题，你承担风险是不是有回报，是吧？你能够承担多少风险，是由你能够想要得到多少回报来决定的。所以下一个问题就是说，你要承担，比如说政治的风险、地缘政治的风险、这个外汇的风险和法务的这个风险，但你来承担这个风险，是不是得到相应的回报呢？如果有的话，那你确实是有回报的，那你就可以决定说你到底要承担多少的风险。如果你不想那个承担这样的一些风险啊，那这个时候你其实很难多元化的，因为这么多人呢，他都已经暴露在这个风险之中，所以这个时候你就需要付钱给别人，让别人来承担这个风险，把风险从你自己的身上移到别人身上。那么当然这里有很多的金融工具可以去使用比如说当你使用这个叫做金融衍生物，比如说这个货币对期货币掉期，或者说你用这个期权的这个交易来在外汇上进行对冲这就可以对冲到单一方向的所存在的一些风险。那么政治风险方面的话，你也可以这个通过股市来进行对冲这个政治风险。那我们还可以从跟你的这个投资顾问进行交流，获得一些定制性的解决方案，问一问他们这个解决方案是什么样子。但是首先的这个一个原则就是要把你的资产尽可能广的分散开来要记得要多元化。我给你举一个例子，就是当中美它的这个冲突或者说这个紧张关系升级的时候，这个贸易战一触即发，那很多中国的公司呢就会把它的生产的工厂呢移到越南去。那在越南呢进行相应的这个投资，如果你以前就已经在越南进行了布厂进行投资，那你可能马上就会受益于此。那其他一些公司呢会把他们的生产从中国呢移到墨西哥去。在过去的一年2023年，我们就看到墨西哥的市场因为有这种中国工厂的生产业的流入，其实受益非常多的。所以呢很多人把这样的一个现象叫做近岸或者是前岸，就是离着中国比较近的一个地方去进行这个生产的一个供应链的一个部署和转移。尽管呢，比如说墨西哥它会更加的昂贵，它的质量呢没有中国生产和制造的那个质量那么好，但是呢它离美国更近，它可以帮助你去管理好投资上的一些风险。所以这个时候你就可以把风险去把它摊薄一些，摊平一些但是并不是说这个摊得越薄越好。有的时候呢，你有这个很多的这种地理上的这样的一个这个风险的一个多元化，那你的这个风险可能就会产生对冲，最后呢达成一个平衡。那么再次谈到，比如说中美之间关于人工智能、关于计算机芯片这样的一个这个斗争，是吧？很多公司呢，现在呢，在中国的公司他们去买芯片的时候，是从美国相关联的这个企业是买不到的，所以他们就到日本买。那你就会看到 日本的半导体行业呢，其实最近是做得非常好的。所以这些呢都是多元化的类型，它帮助你把在风险的角度呢进行一个对冲和抵消。
And in terms of the last portion of this question, how should you balance geographic distribution versus industry to best have an optimal portfolio? The answer is actually it depends on each person because, for example, if you are someone who works in Chinese technology sector, the way you would diversify is maybe invest in US technology or European technology, or maybe go across industries to then put more investments in industrials or consumer staples. This is quite difficult. Several years ago, I had some students and friends who were working in Chinese big technology companies, and they were telling me everything that they invest is in Chinese big tech because it was going up so fast. They wanted so much of it. But when 2022 came around, they lost the vast majority of their portfolio. Remember, investments should be almost like creating insurance, right? The last thing you want to happen is you get fired and your investments fall in value. So in this case, they actually had to sell their house to move to a smaller place, and the consequences can be pretty big. But because there needs to be so much tailoring for different people, this is why most investors will work with a financial advisor.
谈到这个问题的第二部分，就是说你怎么样去平衡你在地理和还有行业上的这个投资的一个分布，最终达到一个最优化的一个投资组合呢？其实这个答案呢要看每个人，每个人可能是不同的。因为举个例子，如果你是在中国的科技产业工作的人，那你想要去多元化，那你可能就要选择投资在美国的科技，或者是欧洲的科技，或者说你跨行业进行投资，那投资在更多工业界或者说消费者产品行业。当然，这个是非常困难的。举个例子，几年前呢，我有一些学生和一些朋友呢，在中国的一些大科技企业工作，然后当时他们就跟我讲，他们所投资的所有的东西都是这些中国的大厂。为什么呢？因为发展非常快，他们想要介入这个趋势。但是到2022年来的时候呢，他们其实投资组合的大部分的这个价值呢都蒸发了。因为投资本身呢，它其实是要创建一个保险，是吧？你最后一个想要看到的就是说你失业了，同时你的投资呢也失去了价值了。那这种情况下，他们最后呢要把房子卖掉，搬到一个小房子去住。那么这种结果其实是影响非常大的。所以你在进行投资的时候，你需要有一些定制化的，根据每个人不同的一些特质和需求进行定制化。那么这也是为什么大部分的投资者呢都会跟他们的投资顾问来进行这个咨询。
OK。好，那我们由于时间的关系啊，刚才我们看到还有很多的问题呢，关于个人投资的一些建议，我们可能就在这里不做解答了。那我们请Ben教授来回答最后一个问题。这个问题是说，如何确定客户的投资金额不是用于洗钱的目的？这个比较有趣的一个问题啊，那请Ben教授来回答一下。
Yeah, so this falls under the realm of anti-money laundering and know your client regulations, so colloquially known as AML and KYC, right? Is a process that before any financial institution, not just banks, but even funds can onboard a new client, they have to do some investigation of who the client is, where did they get their source of funds. So this will include a background check, typically. You need some biography, and you need some proof of income or proof of wealth. Beyond that, people that need to prove where did they come from? Where did the wealth come from? This is quite difficult. And in fact, people who want to purposely obfuscate or hide their purpose of moving money around can be quite sophisticated. And at the same time, the banks may not be that incentivized to also do a very thorough job, because the more thorough that their investigation is, the more painful it is for the client, right? The more documentation that they need. So banks will try to find some balance between we'll do the standard checks, but we'll try to do it as quickly as possible so then the clients can come on board. We think most times this works. Sometimes something falls through the gaps, right? Like in Singapore last year, there's a very big case, and many big banks in Singapore were implicated in not enforcing their own procedures that well. So to this end, I think the use of technology, things like the blockchain, to see if any documentation has been fraudulently altered. These things, I think these tools can be used to try to improve that process. But overall, there's a set documentation when people go through onboarding, and you have what they call a 4 eyes. So 2 people will go through the documentations before a new client can be onboarded, specifically those in the high net worth category and those that own things like charities, foundations, and companies. Generally, the rules for these types of individuals are much more complicated.
这个问题啊，确实是很有趣的一个问题。这个它就是到了我们所讲的这个反洗钱 AML 啊，或者是叫做 KYC， 就是知道了解你的客户。这个过程的话，其实是任何的金融机构，不仅仅是银行，包括任何的基金，他们在有一个新客户想要申请加入的时候，都需要进行这样的调查，去了解这个客户是谁，是吧？他的资金来源是哪里？当然，这个工作包括要做一些背景调查，然后呢，可能你个人的简历还有呢，就是你要有你的收入来源或者是财富来源的一个证明。除了这些的话，人们还要证明他们是从哪里来，他的财富是怎么挣到的，就这样的一些问题，其实蛮难回答的。其实有的时候，人们想要去移动一些钱或者洗一些钱的时候，他们可能会藏掉一些信息，这个过程就会非常的复杂。但是同时呢，银行呢又没有什么太大的利益，想要做一个非常完整的这样的一个调查，因为它的调查越深入越全面，对于他的客户来说就会越痛苦，然后时间呢就会越长，他需要的文件呢也会越多，所以银行呢这个只是想要找到一种平衡，是吧？能够做一些标准上的一些检测检查，尽快的让他的客户完成这种 KYC 的 AML 的一个过程，就可以把资产这个放入到银行之中。大部分情况这个是可以的，但是有的时候呢也会出现一些这个问题。那比如说去年新加坡就会出现了一个非常大的一个洗钱案，那很多的这个大银行，新加坡的这些大银行，其实当时都是这个有实监管的这个义务，被政府盘查。那么最终的话，其实我们想这个利用科技是吧？像区块链科技，那它就可以在区块链上把文件呢进行追踪，而这种文件呢在区块链上是无法进行作假或者是进行修改的。这些工具呢，它其实都有帮助，可以提升整个的这个 KYC 和 AML 的一个流程。但是总体来说，还是需要有一些文件文档，然后去进行检查，最终呢才能够让客户完成这样的一个就是进入到银行的这样的一个过程。所以通常他需要四只眼睛，也就是2个人，是吧？他们来检查整个新客户所提供的这些个文件如果有的时候，比如说你是高净值人士，或者是基金会，可能是慈善组织，或者说一些大公司，那你在这个做一个新银行的一个新用户的时候，这一类的个人他可能会检查的会更加严格一些。
OK， 好，谢谢 Bernard 的翻译。Okay, so Prof. Ben, would you like to say a few words to the audience before we end this session?
Yeah, so again, thank you everyone for joining us. And of course, thank you, Bernard. As you can see, without Bernard, it'll be very difficult for me to teach in the program. So I owe him tremendously. The topics, I think the questions that people have, we address some of this inside the class where we focus more on the principles, the fundamentals, and then we take it to the cutting edge, right? To actually ask when we try to bring this to business or we have an encounter in real life, what kind of considerations do we have? But most of the times, I think the same toolkit can still be applied in analyzing various facets of the financial services sector. Importantly, that sector, I think, is changing quite quickly because of the use of technology. As we've seen in some of the questions and our discussions so far, I expect it to become even more complicated when the deployment of AI becomes more widespread. I think that was the very first question we had. So I hope to see many of you in person. It'll be nice. Singapore is a great place. And again, thank you for joining on a Sunday night.
非常感谢呢，今天这个大家的参与然后呢，也要感谢翻译Bernard， 然后呢，没有他的话也是很难把这样的一个课程很好的呈现给大家。但是我呢想要讲的就是说，今天大家问了一些个问题，都是我们在课上面也会着重去讲的我们会更多的关注的是基本面的一些个原则，然后呢，我们会去谈一些最前沿的一些个问题。这些呢都是你可以实际的把它带入到你的业务之中，带入到你的生活之中，你所遇到的这些问题，让它去帮你进行考量，去解决。那么大部分的时候的话，我们其实都有一些相关的或者说相同的一些工具包，让我们在这个进行分析的时候进行使用。那很多时候呢，我们也会涉及到金融行业、服务行业的各个方方面面在我们的课上都有谈到。所以呢，我快速的讲一下这个科技改变呢，这个速度是越来越快的。我们大家某些问题呢也讨论了，是吧？我会期待呢这个行业的发展呢会越来越复杂，尤其是有人工智能的参与，会让这个金融服务的这个整个的场景会更加的广泛。那么我想呢，这个大家都问了很多的问题，我期待呢能够跟你们面对面相见，是吧？新加坡是一个非常棒的一个国家，那大家可以来到这里跟我们这个进行交流。好了，祝大家周日晚安。
好的，谢谢 Bernard 非常精彩的翻译啊。Okay, so now we have come to the end of the Q&A session. So thank you, Prof. Fu, for sharing your very insightful sharing, and thank you, Bernard, for your translation. Really appreciate your time spending with us tonight. Thank you. 所以由于时间的关系呢，我们今天的互动答疑就暂时告一段落。谢谢笨老师的精彩的解答，也谢谢 Bernard 给我们的现场翻译。所以两位老师现在可以稍作休息。好，那我们在课后呢有一个互动的一个测验题，有5道非常简单的题。那大家可以通过这个我们稍后发在这个留言区的这个链接，马上进行一个测验，测验一下今天的这个学习成果，同时可以获得一张本节课的学习证书。好，那OK，那前2天呢，其实，在我们的这个 EMBA 社群里面啊，我们有同学其实也在聊这个关于投资，聊这个关于 Alpha 和 Beta。那最近有一篇文章啊，叫做《中国投资者全球资产配置的公式》，其中提到这个 Beta 和全球化 Beta 和中国 Alpha 的一个投资组合。后来我们有同学说啊，其实当下最好的 Alpha 加 Beta 的投资组合就是出海加来国大读 EMBA 其实最好的投资呢，也就是投资自己。所以呢，接下来呢，我会用大概15分钟的时间给大家快速的介绍一下关于国大的商学院和我们的 EMBA 课程。好，我想今天晚上来收看的这个朋友呢，可能很多朋友有一些朋友已经申请了我们的 EMBA， 那还有很多的朋友呢，可能也正在思考。刚才看到留言区有朋友也在问哈，就是说是不是自己要读一个 EMBA？大家可能这几年有一个感受，就是觉得这个世界变化的特别快，唯一的确定可能就是这个不确定性哈，所以大家可以就是慢下来，多读书，多思考，为下一个阶段来蓄能。我们的学术主任付强教授呢，曾经在课上也跟我们同学说过，人生的征途是一场没有终点的长跑，唯有持续的学习才能持续的进化。所以呢，那为什么我们要选择国大 EMBA 呢？那接下来呢，我就会从学校的口碑、学术课程和学校同学，包括我们的这个地理位置，来为大家来分享一下关于国大和我们的 EMBA。 说到国大哈，我们不得不提到我们的所在地，就是新加坡。这2年流行一句话叫做"不出海就出局"。出海东南亚呢，现在已经成为创投圈非常热议的一个话题。我们知道东南亚呢有6亿的人口，有着非常巨大的一个红利。那东南亚这个新兴市场呢，在全球供应链重构的这个时代背景下，它发展的特别快。之前我们听说一个预测呢，在2030年的时候，东南亚将成为全球第4大经济体，所以有非常好的一个发展潜力。所以很多的这个华人企业家呢，会选择把新加坡作为他们出海的第一站，在这里来设立公司，来投资创业，布局全球的市场。那这几年呢，有很多的企业家也会在出海的这个过程中呢，来到亚洲排名第1的新加坡国立大学来进一步的深造，来通过国内的 EMBA 全面提升自己的管理能力，丰富自己的知识体系，来拓展他们的这个国际化的视野。那在这里呢，就给大家介绍一下新加坡国立大学。国大呢是成立于1905年，它也是新加坡的第1所高等学府，是一所全球知名的一个100年名校。它的前身在英国殖民时期的时候，其实是一所医学院，但是现在呢，国大已经是一个有16所学院的一个综合性的大学。我们有几个数据来给大家介绍一下国大哈。截止在今年最新的数据，我们国大有2500多位全职教授，有3万多名本科生，有1万2的研究生，还有60多个专业，有174个硕博专业。所以呢，我们是一个非常综合性的一个研究型大学。除了16个学院呢，我们还有我们说的 NUS Enterprise 和 NUS Overseas College， 就是国大创业中心和海外学院。我们这些海外学院呢是遍布世界各地，我们也为我们各个院校的本科生和硕士生提供了非常国际化的实习机会和创业机会。这几年呢，新国大在各大的世界排行榜都取得了非常亮眼的成绩。在最新的2024，就是去年的这个 QS 全球排行榜呢，国大再次蝉联了亚洲第1，全球排名是第8位。那这也是历史上国大第1次挤进了全球前10的一个排名。除了大学的排名呢，从专业学科来说呢，我们有14个学科也是排名全球前10。好，大家看到的这个图呢，就是我们的国大商学院。国大商学院呢是国大的16所学院之一，那也是一所非常世界级的顶级的一个商学院。我们国大商学院呢是最早通过美国国际商学院协会 AACSB 和欧洲质量发展认证体系 EQUIS 这2大非常权威的认证体系的学院之一。商学院呢，根据学术研究领域呢，分成了7个科系，大家可以看到，分别是策略与政策系、房地产系、市场营销系、管理与组织系、金融系、分析与运营系和会计系。按学位来分呢，我们可以分成学士学位、硕士学位、博士学位和非学位的短期高管培训课程。好，那我们现在来看一看我们的最强大脑，就是我们的师资团队。国大商学院呢有210名全职的教授，来自全球30多个国家。那我们国大商学院的教授呢，他们在各自的学术领域都是代表了世界最顶尖的学术水平。国大商学院的教授呢，有一个很大的特点，它也是区别于中国大陆的一些商学院或者是欧美的一些商学院，那就是国际视野，融汇东西。因为你可能很难在世界上找到一个商学院，它可以拥有这样一群学者和教授，他可能是来自不同的国家、不同的肤色，不同的种族，但是呢，它可以很好的把西方的学术理论和亚洲的本土案例给结合起来，它可以真正的意义上做到国际视野，融汇东西。很多朋友也听说过这个我们国大的学风是非常严谨的，所以无论是本科、硕士，还是我们读 EMBA 的这些企业家来说，国大的学术要求非常的严苛。那在这一点呢，我们其实在前期咨询的时候也会提醒我们的申请人，这样呢其实也吓退了一些申请人哈。但是这个对于就是渴求知识的一些企业家来说，国大其实正是他们非常向往的一个学术殿堂。所以现在我们很多的校友在推荐自己朋友来申请的时候，都说要读书来国大。那现在呢，我们简单介绍一下我们的这个 EMBA 课程。国大呢是在1997年开设的EMBA， 那它也是亚洲第1家开设工商管理硕士学位的学校。那我们也是全球第1家针对全球的华人企业家开设的中文 EMBA 颁发 EMBA 硕士学位的学校。在最新的2023年 QS 全球 EMBA 排行榜中呢 ，QS 对全球200多所大学的项目进行了一个非常综合的评估和排名。国大的 EMBA 是排名全球前15，那在这个全球前20的榜单里面，我们也是跻身 欧美院校里面唯一一所亚洲的本土院校。所以如果按语种来说的话呢，我们的中文 EMBA 也是这个全球第一。可能很多的申请人会非常关注一个问题，就是你们国大 EMBA 的特点到底是什么？那你们跟其他商学院的 EMBA 最大的不同是什么？其实我们最大的不同就是我们打造的这个 EMBA 的这个平台，我们是全球独家为全世界的华人企业家提供的一个国际化的中文 EMBA 项目和一个学习平台，也是一个精神家园。我们是致力于帮助我们这些有志的华人企业家出海。希望他们通过我们的学习平台，为我们的学员去打通一个通往世界的窗口，去帮助他们提升他们的商业认知，拓展国际视野，帮助有理想的华人企业家去实现他们的全球抱负。那在课程上是怎么体现的呢？我们的这个课程设置呢是学制是2年，总共有10个学段，每个学段呢也就是每2个月，同学们会从全世界各地飞来新加坡，在国大商学院的教室里面上课，集中授课8天左右，从早上8点半到晚上6点半，所以是一个非常全天式的一个沉浸式的上课。我们大部分的课程呢是用中文授课，少部分的课像今天的 Ben 老师呢，我们是英文授课，同时呢有配的是同声传译。总共呢有10门的课程，可以获得40个学分。我们还有20多门的选修课，也就是说你修满了24个学分，总共修满64个学分的时候就可以毕业。2年的这个课程体系呢，我们分成是道、心、实、气。那这个课程体系中呢，我们精选了10门的课程，这10门核心的课程，同学们会学习到商业管理的最核心的内容，被非常全面系统的去梳理这个商业知识架构，搭建一个非常有体系的知识架构。除了这10门的核心课程呢，我们还有20多门中英文的选修课程，所以我们每年会根据当下最前沿的商业话题来开设非常新的一些选修课，比如说 AI， 比如说 Crypto， 那大家可以根据自己的一些兴趣来灵活的选择。那刚才我们也提到，我们的课程是非常国际化的，为了给我们的同学提供一个更加多元和国际化的学习体验，那我们英文项目的选修课呢，也开放给我们的中文 EMBA 的学员。我们说读万卷书，行万里路，最好的学习呢，就是跟我们优秀的同学一起去看世界。在我们的课程中有一个非常重要的模块，也是最受欢迎的模块，就是海外学段。我们希望通过我们的海外课程，为同学们打开一个观察世界、探索世界的窗口，建立一个多维度的一个世界观。那在我们的英国学段呢，我们是去到的英国剑桥大学，在这里学习技术创新和创业。我们也会参访当地的企业。那在课程结束之后呢，我们会在这个学院的一个大礼堂举办一个非常隆重的结业晚宴。那在另外一个选修课呢，就是我们非常经典的美国学段。我们的同学呢会在美国斯坦福大学或者是加州伯克利分校的课堂上，我们去学习技术、商业管理前沿。去聆听最顶尖的学者给我们讲商业创新，讲创业。那我们也会去参访非常知名的一些企业、科技巨头和创业公司，去感知当下非常前沿的科技，去感受一下硅谷的创新精神和自由精神。那我们的同学除了参访呢，也会安排很多的课外的活动，非常的丰富比如说有足球赛、观看 NBA、打高尔夫比赛，或者是读书会、跑步等等，去全方位的去体验美国当地的社会和风土人情。除了美国和英国的这个海外学段呢，我们还有2类我们叫海外交换项目，给大家提供一个非常丰富的国际化的学习体验。那第一个呢，就是这个我们叫海外进入项目GNAM EMBA Global Naval Week。这个 GNAM 呢是全球30多所的世界非常顶尖的商学院，他们共同成立的一个联盟学校。国大商学院呢也是联盟商学院之一。GNAM 每年都会给联盟学院的同学们举办就各种丰富多彩的一个交流的机会，所以呢，我们在籍的 EMBA 同学在毕业之前，他都可以去申请这30多个联盟学校提供的这个 EMBA 的国际交换项目，参加一个为期1周的交换项目。今年我知道我们有30多位同学，他成功的申请到了有20多所院校的交换机会，所以今年6月呢，我们的同学将会去到耶鲁大学、牛津大学、德国柏林的欧洲管理学院、瑞典斯德哥尔摩经济学院、巴西圣保罗管理学院、韩国首尔大学等等其他的商学院进行一个1周的学习。另外一个交换项目呢，我们叫 MBA Exchange Program， 就是海外交换项目。那这个是顶尖商学院之间的1对1的交换项目。今年我们的同学呢也会去到美国的 UC Berkeley， 和德国的奥托贝森商学院进行一个为期1周的交换学习。 学习结束之后呢，同学们修满了64个学分就可以毕业了。那毕业的时候呢，是授予新加坡国立大学工商管理硕士学位。好，说完了我们的课程啊，我们来聊聊我们的非常多元化、国际化的同学和校友。在全球 QS EMBA 排行榜中呢，我们 EMBA 的学员资历就是 Executive Profile 这一项，已经连续了很多年获得了全球第一。我们国大中文 EMBA 的校友呢，是来自全球各地的华人企业家。到今年呢，我们大概已经有2000多位，他们是遍布世界各地，所以我们的校友呢，可以说是精英云集，群贤毕至。那现在我们以去年最新的这个32班为例，给大家看一看我们优秀的同学都是怎样的背景。去年呢，我们大概有5000多位预报名和咨询的朋友，他们都是来自大概14个国家。那我们从这些非常优秀的预报名的朋友中呢，我们进行了筛选出500位进行申请，最后呢有120位进入了国大。那本届的同学呢，平均年龄是41岁，他们主要的年龄层是聚集在35到45岁之间，占到了70%。其中呢，女性学员是占到了33%。从教育背景来看，同学们都具有非常好的学习背景和学习能力，其中已经获得硕士学位以上的同学占到了45%，其中还有6%的同学已经有了硕士学位、博士学位，所以他们的学历都是非常非常好的。那我们看一下这个职业背景，同学的平均工作经验是18年，平均13年的管理经验。在我们今年的这个学员的构成中呢，企业家是偏多的，占到了75%。那其中呢，核心决策层的同学占到了93%。从地域分布来看，同学们是来自全球13个国家，49个城市，是非常的多元化。那其中呢，大部分同学是常住在新加坡或者海外。那除了新加坡呢，还有来自中国大陆，有韩国、台湾、文莱、马来西亚、印尼、瑞典、德国、埃塞俄比亚、加拿大、美国，所以是非常多元化的，来自全球各地。好，从行业分布来看呢，我们的同学是来自53个细分行业。那我们在招生的时候呢，行业细分、行业占比，这也是我们一个非常重要的一个考量的因素。通常我们一个行业呢不会招生呢不会超过5%，所以这就是我们一个非常跨年龄、跨行业、跨地域的一个非常多元国际的构成。我们 EMBA 的这个学习啊，其实我们知道并不是非常单纯的老师上课的这样单向的输出，它其实更大的价值呢是在于老师和同学之间的思想交流和碰撞。所以我们国大 EMBA 课程这个最大的价值和特色也就在这个地方，就是说我们在前期在招生的时候，我们会精心的选拔出一批来自全球各地各行各业、背景多元、一群非常有趣有志的一些华人企业家和管理者，所以大家互相在学习中产生的这种思想的火花，我觉得这是我们的价值所在。好，那我们看一下我们的全球校友网络。国大的校友呢是遍布全球各地，我们国大呢有30多万校友，商学院有差不多4万多校友。那我们中文 EMBA 呢大概是有2000多的校友是遍布全球各地。全球呢，我们是有65个校友会和校友组织。那和我们中文 EMBA 互动比较多的校友组织呢，是有中国大陆的华北校友会、华东校友会、西南校友会、华南校友会、台湾校友会和中文校友会。那各地的校友会呢，也会定期的举办各种各样非常丰富的活动，比如说有学习社群，有读书会，有跑步社群、高尔夫社群、羽毛球社群、足球社群，甚至是健康社群、减肥社群，非常的丰富多彩。好，现在简单给大家介绍一下我们的这个申请的条件。本科以上的学历，工作满8年，具有5年的管理经验的企业家或者是职业经理人就可以申请。但是其实大家知道啊，我们每年申请和预报名其实有五六千，那最后能够成功录取进来的就只有100位左右，其实竞争是非常激烈的。所以我们经常会被问到一个问题：你们国大 EMBA 到底要招收怎样的学员？你们到底是看重什么样的潜质？其实这也是面试中很多申请人会问我们面试官的一个问题。那刚才提到的这些报名的条件呢，都是非常基础的一个条件。我们在整个招生的过程中呢，也会非常全面的综合考量这个申请人的综合的背景。那除了这个刚才我们提到的这个要求呢，我们还会考量，比如说申请人和他的企业是否计划出海，或者已经是base在海外，在海外开展业务。那第二点呢，我们会看这个申请人和他的企业是否具有一个成长性。那第3点呢，我们会看这个申请人他的学习的自驱力是否具有一个好的学习能力和一个持续学习习惯。与此同时呢，我们会对这个申请人的个人的素质和价值观进行一个综合的考量，来全面的评估这个申请人是否具有我们所说的国大气质。 那今年呢，我们也推出了一系列的新生奖学金计划，来鼓励这些在各个领域有杰出贡献的学员。所以，如果您对我们的奖学金感兴趣的话呢，欢迎您添加我们的招生老师的微信进行进一步的咨询。那关于这个申请流程，也是大家经常会问到哈。那首先第一步呢，您可以把你的这个个人简历或者是个人介绍发给我们，进行一个预报名。那我们会进行一个初步的评估，符合条件的申请呢，我们会进行邀请，在我们的这个 online portal， 就是在我们的申请系统上去填写一系列的申请材料。那我们之后呢，会对这个申请材料进行一个非常严格的审核和背景尽调，就是刚才那个Ben老师说的 KYC。那在审核通过之后呢，我们会安排入学的视频面试之后呢，我们会有一个招生遴选委员会，会对每一个申请人进行1对1的一个遴选讨论，来决定是否来录取。那之后呢，我们会正式的发布这个录取的通知书。接下来呢，我们的招生团队会协助大家进行入学的准备，比如说申请签证、入学体检等一系列的入学的准备，迎接今年9月的开学到来。好，如果您对我们的课程有感兴趣的话呢，欢迎您添加我们招生老师的微信，把您的背景资料、把您的个人信息发给我们，做一个初步的评估。那我的分享呢，就暂时到这里。那非常欢迎志同道合的朋友来申请国大 EMBA。那我们也非常期待在9月份，在国大商学院的这个门口迎接大家的到来。最后呢，我们非常感谢本季大师讲堂20多家的合作伙伴对我们的大力支持，帮助我们共同的推广我们的师说新语大师讲堂。非常感谢大家的参与，祝大家晚安，谢谢。